Okay, so we are starting the exam kit, right? As promised, like the last class we did not take yesterday. We did postpone it to today, but we actually had the agenda to do this two chapters, right? First of all, we'll do the practice of double entry, right? Which is this
Mhm,
chapter, this one.
mhm.
And after that, we will also practice the three topics that we studied in the second class, which were known as the sales tax, discounts, and the returns, right? And for that, the basically the topic is this one, okay? Sales, purchase, and sales tax. So we'll
Okay.
be practicing these topics, this one, as well as this one in today's class, okay? And the next one on Monday, we'll probably be looking at the next chapter. All right.
Okay.
So these first two I'm not doing right now, this first one and the second one, because again, as I told you, these were the theoretical areas, right? So I'll do them at the end of the syllabus when we'll reach the end. Okay.
Okay.
Now, first of all, let's start. One second. Question 31. All right. So double entry questions are starting from this. Okay. Till now, we have not started the exam kit. We are doing it's the first time we're doing the exam kit, right? We have just practiced the double entry worksheet that I sent it to you, but that was separate, right? It was not related to the kit, and neither will
Mhm.
you be asked the detailed question like those worksheets. Okay, so most of the questions will be asked like this, as you can see on the screen. There will be options A, B, C, D. You have to select the correct one. All right, let's start the first one. So in this question, again, there's a general rule to every question. You first have to read the bold requirement, which is this first one, this one. Okay.
Yeah.
What is the double entry for this transaction? So it's asking for this whole transaction, what is the double entry? Now let's read what he's saying over here. So Oscar runs a sole trader business selling computers. On 12th January 2017, he employed his daughter as an administrator for the business and took a computer from the storeroom for her to use in the office. Okay, now we have to understand what's happening over here. So there is this person known as Oscar. He employed his daughter, right, on an administrator job, and he took an already abandoned computer, which was, just lying over in a storeroom or anywhere, and he just brought it to his table and he kept it working. Okay, so that means that something like a non-current assets is being working over here. Okay, now let's see what will be the double entry for this one. Okay, now again, let's read this. As an administrator for the business and took a computer from the storeroom for her to use in the office. Okay, so what will happen is that basically I don't think any kind of drawings are happening over here, right? Because drawings basically means to take anything for your personal use, to take any cash or goods for your personal expenses or personal use, right? So I do not
Okay.
think that any kind of drawings are happening over here. Now you see this word cost of sale. I'll explain this in a while, that what does it consists of, and further you'll get this when we'll start the financial statements as well. Okay, so I think that the correct entry over here should be option B, because it's debit non-current asset, because the asset was just lying down in the store, right? So he brought it into use, and that's why the assets are increasing over here, right? So debit the
Why is
non-current.
increasing if the computer goes from the storeroom to her daughter?
Yes, exactly. Exactly. So in that case, the non-current assets are increasing, known as the computer, and credit cost of sale, I'll explain you when we'll go to the end of the questions. Okay. Because the
Yeah, but
cost of
he
sale,
already sorry, but he already had this computer. So why is going up?
yes,
The,
he already had it. That's correct. But the thing is that no other entry is joining this. Let's talk about the other entries as well. So first, let's talk about this A entry. Debit drawings, credit cost of sale. I don't think any kind of drawings are happening over here because he's
yeah.
using inside the office, right? So this cannot be the option.
Mhm.
Now, debit cost of sale, credit drawings, we never credit drawings. Drawings is always an expense. It always increases. Expense
Yeah.
never decreases, right? So C option does not make sense over here. And what about the D option? Debit cost of sale, credit non-current asset. He's not selling the asset. He's not reducing it. It's being used, right? So out of all these three, yes, the concept is that he already had bought the computer beforehand. But the thing is that only option that is going in this situation is the option B, right? Because I've proved you that
Okay.
A, C, and D are wrong over here. Okay, so you
Okay.
can also use this technique in the exam whenever you're not understanding the question, that what's happening. You can use the best one which suits the scenario. Okay, got it?
Okay.
All right.
Yeah.
All right, great. Let's move to the question 32. So it's saying over here, which of the following pairs of items would appear on the same side of the trial balance? Okay, so let me skip this question because we have not done the trial balance chapter yet, right? Or let me do one thing. Yeah, we'll do this question afterwards because this relates to this topic trial balance, and in the captain kit they have mixed the questions, right? So I'm skipping this question right now. We'll come back to that
Okay.
after we'll do the trial balance topic. Okay, let's do this question 33. The double entry
Yeah.
system for bookkeeping normally results in which of the following balances in the ledger accounts? So it's basically asking that which two types of balances have like with like balances, right? Like what two types of things have debit balances and what types of things have credit balances. Now we've already studied the group 1 and group 2 transactions, right? On the first day. So
Mhm.
it's the same thing, we have to apply it over here. Now let's see it one by one, option by option. Number A is assets and revenues are debit balances. This is, I think, wrong because you see, I told you assets are debit for increase. Yes, that's correct. But revenues we write on credit, right? It's wrong. And on the credit balances, it has written liabilities capital. Yes, these two come on the credit
There
side.
is no expenses. Yeah.
Exactly, exactly. There is no expenses. Expenses should have been over here on the debit side,
Yeah.
right? So this option is wrong. Now, number B is revenues, capital, and liabilities on debit, asset expenses on credit. It's the opposite. Basically, it just have swapped it, right? So B option is also wrong because on credit, these items come, these
Yeah.
revenue, capital, and liabilities, and these
Mhm.
two come on the debit side. So it's wrong as well. Now, C option is assets and expenses on debit side. Yes, that's correct. And liabilities, capital, and revenues on credit. Yes, this option is correct because this is exactly the
Yeah.
thing that we studied in group 1 and group 2, right? So C option over here is correct. All right.
Yeah.
Now let's do question 34. Which of the following entries would be required to account for a reimbursement to the petty cash flow? Okay, this is also a question of petty cash flow. So again, I'm skipping this. Again, they have mixed questions. I don't know why. Let's look at the next one. Yeah, this, I think this is also referring to the statement of profit or loss. We also have to do
Okay.
that. Okay, let's do this question. This is relevant to the double entry. So
Okay.
Elijah started the month with cash at bank of 1780. This is the opening balance. Okay. So what was the balance carried forward? So carried forward basically means C slash F. So this means the closing balance, right? Like I told you in
Yeah.
the T accounts. After
Yeah.
accounting for the following transactions in June. So we have to account for all these transactions and then tell the closing balance simply. Okay. Now this
Okay.
is the opening one, 1780. Now, Elijah withdrew 200 per week to cover living expenses, right? So that means the entry would be credit bank, right? Because she's taking out of the bank, right? So that
Yeah. And
that means
debit
it's getting minus.
expenses. Right.
Exactly, exactly. Now we basically have to tell it for June, right? For the whole month. This is per week. So we have to convert it into monthly. And how many weeks are there
Okay.
in a month? There are 4 weeks, right?
Yeah.
So for 1 month, it will be 200 multiplied by 4. This will give us $800, right? So first
Right.
transaction, I'll minus from this. 800 will be minus. Now let's look at the second one. A customer paid for goods with a list price of 600. Again, I told you list price was meaning the exclusive amount. You remember in the sales tax topic, like this amount does not have any discount or tax added or minus, right? This is just a net amount. Less trade discount of 5%, right? So what's happening is that this $600 was the price for the goods, right? That the customer bought, but it does not have any trade discount minus yet. We have to minus it right now. Okay. So what
Yeah.
we'll do is that 600, the easier way to do this is that 600 into 95%. So we'll get the answer
Mhm.
directly. You can also do 600 into 5% and then minus it. So it's the same thing.
Yeah.
So let's see. One second. So this gives us answer of 0.95, 570. Okay. So 570, a customer paid for goods, right? So that means we received these
Yeah.
money. So 570 will be added over here. Okay. Now, number three, an amount of 400 was received from a credit customer, right? So we received an amount of 400 that was created as a receivable some time ago. We received it now. So we'll add it in our bank. Okay, 400 will be added. And the last one is bankings of 1200 from canteen vending machines. Now we need to understand this statement. So this basically means that this person, this Elijah, might have some vending machines operating as well. He might be owning them, right? So whatever earning he's generating from these vending machines, whatever cash he checked after the month, in the month of June, right, those he checked were $1200, right? Now these $1200 he decided to put in the bank. Okay, so what happens is, again, he will be depositing these 1200 into the bank. That's why they will be added over here. Okay,
Yeah.
all of the transactions are done. Now 1780 minus 800 plus 570 plus 400 and plus 1200. So this gives us 3150, 3150. This is the closing balance for his bank account. Okay, so
Okay.
3150. So this was a fairly easy question. We just had to add the incomes and minus the expenses. Okay, clear? Are you clear here?
Yes.
Okay, great. Now let's look at this as well. Question 37. Okay, let's do this as well. After the corrections, what should be the balance on the following account? So this, you can see, this is the bank account, right?
Yeah.
Now this word overdraft, I also told you in the first day as well, that what happens is that when your bank balance goes into minus, if it is not a positive figure, if it is a negative figure, then this is called an overdraft. Okay, so that means this 1340 will not be his asset, it will be his liability, because it's a negative balance. This does not belong to us, this belongs to the bank. Now we have to pay to the bank. Normally what happens is that the amount we deposit, it's our asset, right? We can withdraw it anytime we want. But this 1340 is the negative balance, it's an overdraft. That means we have to owe back to the bank. Okay, so this is a liability, and liability always comes on a credit side. So that means it's written wrong over here, right? So first we'll make the correct account and write it on the credit side. But let's also discuss all the other things. Returns of goods purchased for cash. So this is returns of goods. All right, so these are the refunds, right? The goods that we purchased for cash, we received it back. But I think the thing is that it's written cash, right? So why should it be in the bank? So I think this 50 will be ignored, we will not write it, because cash transactions are separate, bank transactions are separate, right? Now payments to credit supplier, this is written on the correct side, 990, because we pay, right? So that's why what we do is debit payable, credit bank. We decrease the bank in this side, so that means it's correctly written. Now rental income, this is also written wrong, because it's an income, we receive the cash, right? We receive the money into the bank. So what happens is 1300 will be written on the debit side, this side. Okay, and all of the things we'll just correct in the account that we're making. So this is the correct bank account.
Sorry, rental income. So it should
Yeah, yeah.
be
It should
debit,
be, yes,
spent
on
on
the
credit
debit bank.
bank.
So what happens is we will do debit bank because we're receiving money, and we're doing credit rent income. Why we
Okay.
did credit rent income? Because remember I told you in group 2 there was a word of income as well. Sales, income, capital, liabilities, right? So any kind of income also increases on credit side. So that's why we do this entry. Okay.
Okay.
All right, let's write the correct balances. This is overdraft and 1340, 1340. So let's first complete this side, reimbursement of petty cash flow. So what happens is, let me also give you a small summary of this. When we'll start the petty cash chapter, that's I think also towards the end of the syllabus, what happens is that there is a petty cash tin in every company that every company has to maintain for the small expenses, right? Now what happens is, on a weekly basis, on a 2 weekly basis, on monthly basis, what happens is that obviously the money in it finishes, right? So we have to reimburse it. We have to top up the petty cash box. And where do we do that from? We do that from the bank, right? So we credit the bank because we take out the money from the bank and put it in the petty cash box. So this is also written on the wrong side because it's an expense, right? It's a payment. It's not a receiving thing, right? So that means we have to write 45 on the credit. This was the petty cash. Okay, now receipts from customers, this is written on the correct side because this means the cash that we received from the customers is 4,400. So 4,400 received from customers. Okay. Now let's look at these sides. We have to ignore this balance because this does not belong in the bank side. Payments to credit suppliers, it's written correctly. So 990. Payments, right? Okay. Rental income is also written on the wrong side. So 1,300 will be written on the correct side. Rental income. Okay. And after that, payment of electricity bill, that is 700. So again, this is a payment. That means bank is reducing, right? So 700 will be electric bill. And let's look at the last one. Okay, there is nothing else over here. We just have to now balance the account, just like I told you in the second class, and just create a balance carry down. So first we have to see what is the heavier side. I think the debit side is the heavier side, right? So 4,400 plus 1,300, this gives us 5,700. Okay, and we'll write this amount over here as well. Now balance carried down will be brought over here. Let's see what this is. 1,340 plus 45 plus 990 plus 700. Okay, so the total is 3,075, and we'll just minus this from 5,700. So the balance that we're getting is 2,625. Okay, so this is the correct closing balance of the bank, which is $2,625. Okay, so we'll write this amount in this answer. So basically what I was telling you in the blanks was that you might get some blanks like this. Blanks basically means that they're just empty boxes. So there are no options to choose from. You have to just write the answer. So there is very much uncertainty in these types of questions, but I'll make sure that you get the concept in the right way, so that blanks can also be, scored marks in a well. All right, clear? Did you get this question? Is it clear?
Yeah, should be
Okay,
fine.
great. Now 38, let's do this one. So what accounting entries are required to record this transaction? Let's see. Andrea started a taxi business by transferring her car at a value of 5,000 into the business. Now you see, she's starting a new business, although it's her own car, but she's introducing the capital, right? And I told you capital can be in both forms, cash as well, and any kind of asset as well, like a building, machinery, van, car, anything. Okay. Now
That should be debited.
she's transferring the car, exactly, right? Now let's see what the entries would be. Number A is debit capital. We never debit capital, right? So this entry is wrong from the start as well. Now debit car 5,000, credit drawings 5,000. No, there is no drawings over here, right? So debit car 5,000, credit capital, yes, this is the correct entry, option C, because again she already purchased the asset uh, beforehand. But the thing is that we are accounting for the entries according to the business point of view, right? So for the business point of view, she's getting a new car. So for the business point of view, she's increasing the non-current assets, right? That's why debit car by 5,000, and credit capital also increases by 5,000. Okay, so C option is the correct one over here. All right, got it? Clear?
Yeah.
Okay, now let's do the next one. 39. Which of the following statements best describes the purpose of a purchase order? Also leave this question because we have not studied the documentation chapter. That's, I think, the chapter is 6 or 7, I think. Okay. In that chapter, we'll study this in the next week, hopefully. I'll explain you all the documents, like what happens in the sales cycle, what happens in the purchase cycle. So we'll do these questions, the remaining ones, in that after that lecture. Okay. This invoice also belongs to that. Okay, let's do this question 42. Are each of the following statements about accounting equation true or false? Now remember I told you the accounting equation in the first lecture. It was basically asset is equal to capital plus liabilities, right? So basically all kinds of assets in the companies are financed by a mix of capitals, shares as well, and liabilities, which are debt as well. Okay, now let's see this is true or false. Business assets will always equal business liabilities. It's not correct, right? Because sometimes the business have more amount of capital than liabilities. It never happens like that, that liabilities are 100 and assets are also 100. All assets are not financed from liabilities, right? So that means this is false. Okay. Now, business assets will always exceed business liabilities. This is also wrong, because some companies have more liabilities, more debts than their assets as well. That's why they're known as a risky company. Like, let me give you an example. One company might have $1 million outstanding in loan, right? And they might have just 200,000, right, in the assets. So that means liabilities are 5 times more than the assets. This is a very dangerous situation, right? So that means
And this is not good, right?
exactly. That's right. So that means this is also false. Assets never exceed the liabilities in all scenarios. Now, business assets include proprietor's capital. Yes, exactly. This is correct. Why is it correct? Because if you look at the equation, asset is equal to capital plus liabilities. So is the asset including this capital? Yes, it is, because it is equal to capital and liabilities, right? So business assets include both capital as well and liabilities as well. Okay, so this is true. Let's look at the last one. Business liabilities includes proprietor's capital. No, this is wrong, because liability is a separate point of time, right? It's a separate
Yeah.
item over here. So that means this is false. Okay, got it clear?
Yes.
Okay, great. Now let's look at this one as well. 43. So are each of the following statements about the journal true or false? Now you remember this was the seventh book of prime entry. I explained you the seven books of prime entry: sales day book, sales return day book, purchase day book, purchase return day book, then cash book, then petty cash book. And what was the seventh one? This journal, right? And I explained you that in the journal, all the things which are not written in the above six books of prime entry are written in the journal, like purchasing any new asset, any new depreciation is charged, right? Now, journal records all bank and cash transactions. No, this is false, because all bank and cash are normally written in the cash book, right? So I think this one is the false statement. The journal records all accounting transactions. No, this is also false, because there are other six to remember as well, right? Other six also
Yeah.
have some kinds of accounting transactions. The journal is a book of prime entry. Yes, this is absolutely true, because this is the seventh book of prime entry. The journal records all credit sales transaction. No, this is false as well, because where are the credit sales recorded? Sales day book, the first one, right? Okay, are you clear till here? Any confusions, any problems?
No, that's fine.
Okay, great. Now let's look at the next one. Okay, so I think next questions have some amount of non-current assets which we have not yet studied, right? Now I think let's move on to the next one, which is the topic is, I think, the sales tax one. Let's practice that as well. Just a minute. Okay, so the questions for sales and sales tax are over here. Let's practice them. Let's see how they're done. Now, number one is question 67. Erin is registered for sales tax. Let's first read the requirement. If sales tax is charged at 15%, so the percentage is given to you over here, what will be the gross value for the sale invoice prepared by Erin? Okay, so again, we have to tell the gross value. Again, gross, let me write the equation over here as well. So gross basically was is equal to net plus the tax.
Yeah.
Right? If we add the tax in the net amount, then we basically get the gross amount. Okay. Now
Yeah.
during May, she sold goods with a list price of 600. You see over here, it's written list price. And after
Yeah.
that, it's also saying excluding sales tax. Now I told you two words which were exclusive amount and inclusive amount. So this list
Yeah.
price was another word for the exclusive amount, right? So this 600 does not have any kind of tax added in this. Excluding sales tax to Kylie on credit. Okay. As Kylie was buying a large quantity of goods, Erin deducted a trade discount of 5% of the normal list price. Okay. So there are two things involved in this question. First of all, there's a discount, then there is a sales tax. So both topics will be tested over here. Okay. Now let me tell you the sequence, like what approach do we adopt for this kind of question. So always remember, whenever there is a discount, and sales tax as well in every question, what you have to do is, first of all, enter the discount. Okay, first of all, always remember that we have to minus the discount from the price. In the stores, you might have also seen like this, right? So first of all, the discount will be minused from the $600, and after that, at the end, on the second step, the sales tax will be added in this. Because if we do the opposite way, if we do it like sales tax first then discount, then it will be not fair, right? How it will be not fair? Because sales tax will also be subject to a discount, and that is very ethically wrong, right? So we don't have to do that. First we have to account for the discount, and then we have to apply the full sales tax. We never discount the sales tax amount. Okay. Now, how much is the discount percentage? It's 5%, right? Again, it's a trade discount. So 600 into 95% again, this gives us 570. Now this is the after discount price. On this price, now we have to apply the sales tax. Okay. Now this amount is excluding tax, right? I explained you that in the exclusive amount, it's very easy to calculate the tax. We just have to apply the percentage. And what is the percentage over here? 15%. So 570 multiplied by 15% straight away. Okay. But if it was inclusive amount, what should we have done? 570 into 15 by 115. Because I told you in inclusive amount, what happens is that the price already includes the tax element, right? So that's why it's not 100% amount. It's a 115 or any kind of, percentage that is added in the 100%. Okay. But that was only for the inclusive amount. I'll explain you when we'll go to the questions, in the further questions. But over here, we just have to apply the 15%. So 570 into 15%, this gives us 85.5. So this is only the tax amount. Okay. Now what it has asked in the question, what will be the gross value, right? So how much is the tax? 85.5. Sorry, one second. How much is the net amount? We have calculated over here, 570, right? And how much is the tax over here? 85.5, right? So if we add these both, we'll get the amount of the gross value. So 570 plus 85.5, it's 655.5, right? So this is the gross amount that this Erin will charge to the customer, because obviously she will take the tax from the customer, and then this 85.5 will be given to the HMRC, which is the tax department, right? So this answer will be 6.55.5. Okay, got it. So this is the approach how we will do these sales tax questions. Okay. Now this was a question 67 only had one thing, right? It only had, I think, just sales, right? Which is basically output. But this question 68 has both things, outputs as well and inputs as well. So sales and purchases both. So in this kind of question, I told you that we have to make a sales tax account, the T account. Okay. Now at 1st December 2015, Laurel owes the sales tax authorities 23778. So again, she's owing. Owes basically means she has to give them. This is the opening payable, right? Opening liability, opening payable, 23778.
Yeah.
So during the month, these transactions happen. First of all, sales, then purchases. Now sales are 800,000 exclusive amount, right? And 17.5% sales tax. So how will we calculate the tax? This is exclusive amount, right? So just multiply it with the percentage. Let's calculate this. 800,000 into 17.5%. So this is 140,000. 1,40,000. Okay. This is the output tax because these are sales, right? Now, what about the input tax? Purchases are 590,790. Now, this is inclusive amount. Okay. And the tax percentage is the same. How will we calculate this? It's very simple. 590,790. This amount already has 17.5% added in this. So what we'll do is, to convert it into 1%, we'll divide it with 117.5. Right? This is not a 100% amount, that this is a 117.5% amount. Okay. And what do we need? We just need the 17.5% element, which is just that sales tax. Okay, so always remember, we'll do calculation, we'll create a fraction like this whenever we are dealing with the inclusive amount. Okay, so
Okay.
590790 divided by 117.5 into 17.5. So this gives us the answer of 87990. Okay, so we've got both the things, outputs as well and inputs as well. Now let's make a sales tax account. Okay, first we have to write the opening balance. You remember in the start of the question, there was a payable opening balance that she owed to the tax authorities, and this was 23778. You can see over here. Okay, so 23778. Now let's write the input over here, input tax and the output tax. Okay, now input tax we calculated is 87990. This is the purchase one, and output tax, I think it was 140,000, right?
Yeah.
Okay, 1 second. Okay, great. So we have done both the things, output as well, input as well, and the opening balance as well. Now simply just balance the accounts. So I think the heavier side over here is this one, the credit side. So this is 140,000 plus 23778. So this is 163,778. Okay, and 163,778. Okay, so the difference side is this one, the debit side, balance carried down. So let's see, 163,778 minus 87,990. So this will give us the final balance of 75,788. And again, this balance is called as a payable balance, because I told you the relation between the opening and closing. The opening for payable will always have a closing payable over this side, on the opposite side.
Mhm.
And if it was a receivable, it should have come over here on this side. Okay, and one more thing can be proved from here, that you can see the total payables are 163,778, right? This is the total amount that she have to give to the tax authorities, and only what she
Yeah.
has to receive, what is the only refund over here, 87990. So even if we minus from this amount, we'll still get 75788 still as payable, right? Even after minusing the figure. So this
Okay.
balance carried down, 75788, is the payable balance. Okay,
Mhm.
I hope the sales tax topic is a bit clear to you, a bit
Yeah.
more clear than before. And again, we'll practice these more questions so it will be further clear as well.
Okay.
Okay, now 69, let's see this question. If sales including sales tax, so these, it's talking about sales, which means the outputs, right? And outputs are inclusive amount because it includes the sales tax, amounted to
Mhm.
2761215, and purchases exclusive amount are 18,000. What should be the balance on the sales tax account, assuming all transactions have this percentage? Okay, so again, it's
Okay.
the question of purchases as well and sales as well. So we have to make a sales tax account again over here. Let's make it over here. So sales tax. Okay, so there is no opening balance over here, simply the inputs and the outputs.
Mhm.
Let's calculate how much is the output first, sales. So 27612.5. You see, this is the inclusive amount, right? And this amount actually has the tax element already added into it, right? So what we'll do is that it will divide it with 117.5, right? And what we need is 17.5, just the tax element. Okay, so 27612.5 divided by 117.5 and into 17.5. So it's giving us 4112.5. Okay, so always remember this treatment, this fraction treatment for the inclusive amount.
Yeah.
Okay, this is the output tax that we have got over here. Now let's also calculate the input. Input is very simple because it's just in exclusive amount, right? So 18,000, we'll just apply 17.5% over here. So 18,000 into 17.5%. So it's giving us 3150.
Yeah.
This is the input tax. Okay. Now 3150 is the input tax, and 4112.5, this is the output tax. Okay. So one thing is for sure, that the total amount that we have to pay to the government is 4112.5, and only which we have to receive is 3150, right? So the heavier amount over here is 4112.5 and 4112.5. So the balance carried down will be over here. Let's calculate this. So this is giving us 962.5, and this balance will be payable, right?
Still
Why is
payable.
it a payable? Exactly. Why is it a payable? Because the total amounts that we have to pay to the government are more than what we have to receive,
Yeah.
right? Exactly. So that means this 962.5 is the closing one, which is the payable balance. 962.5.